Alright guys, welcome back to another video here on the Dividend Doggo Show on YouTube, and I'm bringing you in for a weekly portfolio review, and we're going to dive in straight away into the portfolio. We're just going to go over the quick metrics and everything for the portfolio right now. We're looking at the all-time view here. We are at just under $730,000 invested on the M1 platform, and we have about $216,000 worth of gains. Of that, 175,800 is market gain, and $40,842 is earned dividends. That is an absolutely fantastic number there. I am really excited and happy to see that earned dividend number just keep climbing up. We were just under 39,000, or just over 39,000 last video. We did have a payment roll in. I believe that AbbVie hit its ex-dividend date, so that's one of the largest payments the portfolio receives that'll be coming in early February. From last week, obviously there is a pretty massive balance difference. You will see as we go into the weekly review that we have bumped a sector up. Just looking overall at the different sectors that the portfolio has, you can see that a lot of these are up pretty significantly. The newer positions like the Como Money Pie have not quite had enough time to really get those fantastic gain return numbers that the rest of the sectors have. And obviously monthly dividends is a relatively low one as well. That is a relatively low position overall, though it's mainly just BST and the credit card rewards pie. But I will go over everything as we go into the weekly portfolio review, and you can kind of see how things are going for the week. So overall for the week, drum roll, it was a red week. Just slightly a red week. Now the gain here is negative $1,128.80. However, the actual market gain was negative $2,704. So this is a little bit deceiving because it does go by this money weighted average return. So it's factoring in that I earned $1,500, $1,575 worth of dividends during this past week. So overall, the week for the market was pretty rocky. It was a lot of sectors were up and down. As you can see, we have a couple in the green, but mostly overall, it's in the red here. So healthcare, which is mainly AbbVie and Johnson & Johnson, we'll dive straight into that real quick here. AbbVie had a green week. Johnson & Johnson had a red week. The AbbVie is obviously way higher weighted in this portfolio. It has just grown so much. Consumer had a relatively red week with Costco being on sale, Lowe's, Target, Home Depot, and then Mo being the heaviest weight in the portfolio, kind of carrying some gains there with it being 2% in the green. So overall, if you're looking to buy into these companies on red weeks, like for Costco, I mean, if you're buying at the end of the week here, you were getting a 6% discount on what the stock was trading at last week. So this is definitely something to look forward to when you're looking at these higher quality positions that have really run up over the past year. For Lowe's, Target, Home Depot, Costco, those are all really high quality stocks. So keeping your eye on your target of when your buy point is for those stocks is going to be really important. Now, overall, the utilities pie was just barely in the red with both Duke and VST. My energy sector plays, utility sector plays, being just barely in the red, about 0.5%. So not too bad for the week on utilities. We'll come back to finance in just a moment. Como Money overall was up, being held up here by Berkshire Hathaway. SCHD wasn't really down. It was barely in the green, and Berkshire Hathaway was up about 1.36%. So overall, that pie stayed up. Tech was just barely squeaking in the green, with Apple holding a large chunk of this portfolio, weighted at 70% here. It's at 71.2 right now. Microsoft dipped a little bit, so these are things that you want to be watching and looking for. If you're looking to pick up shares of Microsoft, I mean, you're paying a premium for them, but you're buying a top tier, high quality company. Industrials overall in the green, strong across the board there, 2 to 3% in every single one of them. So industrials had a pretty solid week overall. And then BST, which is heavily weighted in technology, was down about 1% this week. I've noticed a lot of people are buying this up in the Joseph Carlson community. This is being pushed really, really hard. It's a fantastic stock. It's done very, very well for me over the past 2 years that I've owned it. You can see I started buying this in August of 2019. And I wish that I had put more into it back then, because, man, did it really run up, and it's been a solid performer there overall. So let's go back. We have one sector to look at, and that is where we put some money in the portfolio this week. That is in the finance sector. You can see here we have a new top weighted position for the portfolio. I have opened up a position in Ally Financial, which is an online bank. I have used their services for several years as a savings bank, and then also used them recently for a home loan transaction. A lot of you know, if you're new to the channel and didn't know this, I'm primarily a real estate investor. I own multiple properties across multiple states, and I've been real estate investing for about 16 years now, since my early 20s. I got started with small condominiums, and that's just kind of how the cash flow rolls into the portfolio. It's how I funded this portfolio, and I'm building out a much easier method for me to manage later on in retirement. And we're hoping to get to an early retirement goal of this portfolio making us about $80,000 a year in dividend income. So one of the ways that I plan to do that, last year right around this time, I was buying JP Morgan up. And you can see that JP Morgan had a really, really rough week. They had their earnings call, which was actually pretty good, but they set their sights on and their forecast a little bit lower than what the expectations were, which drove the stock down a little bit. Bank of America was also down a little bit. Bank of OZK was down a very, very tiny position. I would barely even call that down. And Hingham was down just about 1%. So overall, financial sector had a really rough week. Why did I buy Ally? So let's take a look at that real quick. So first off, let's look at this position now. I bought at $51.75, 603 shares, costing me $31,220.65. So what does that mean for me? You can see here the PE ratio is relatively low on this bank. The dividend yield is also relatively low. The market cap is very low. This bank has a lot of room to grow, and they're doing a phenomenal job with acquisitions of new customers, offering decent interest rates compared to traditional banks like Wells Fargo, Bank of America, JP Morgan. They offer better savings interest rates. They do offer market trading. They offer home loans. They offer automobile loans. So overall, I've been watching this for a while, and I should have bought into this bank about a year ago when I first started looking at it. But let's go ahead and look at a couple different things here. So first, I'm going to bring you into, this is a tool that I use. It's part of Joseph Carlson's Patreon. This is Qualtrim. This is what I use to get a quick glance at a stock, to kind of get an idea of what the kind of metrics look like before I deep dive into a stock. So I'm going to go over a couple different things and why I'm interested in this stock. Overall, the revenue has continued to grow. And if we look at quarterly here, we can see some of the 2021 growth. 2021's full metrics aren't in the tool yet, but you can see up through 9/30 2021 that we've had pretty consistently right around $2 billion in revenue across the board from the end of 2020 all the way across 2021. And I expect the end of 2021 to be very similar. Now, EBITDA had, the obvious drop here in 2020 with the pandemic scare. I'm not too concerned overall with that. Free cash flow did have a little bit of dip here, and when we're looking at this, overall, you can see that we do have the little bits of dip, which I'm just kind of writing off, but net income is kind of pushing in an upward direction overall. When I look at this annually, 2020 was rough, and we will get the massive boost that we'll see with 2021's full metrics for net income. Their debt has been going down, which is absolutely fantastic. When I look at this on the quarterly scale, debt has been reduced significantly. This is a company with a plan, and this is why I love investing in companies like this. You can look at this company and you can see that management clearly has a plan. Their plan is reduce debt, increase their dividend significantly. When you look at this, the historical chart goes back to 2016. They were only paying 8 cents then, but now they're paying 25 cents. And this is going to be increased. So as part of that plan, one of the big push announcements, you can see that they've got a pretty massive cash balance. They're actually a net positive balance versus debt to cash on hand. And what they plan to do with that is what interests me. Not only are they growing the business overall, you can see that their earnings are going up with their EPS. Their shares outstanding are going down overall. When we look at the scale, this is a plan for management. They want to reduce the shares outstanding, reduce the debt, increase the dividend, making this company even more attractive, and raise their earnings. They've got pretty significant free cash flow overall. And going forward into 2022, as interest rates rise, they're going to be able to offer more attractive products to customers, including better interest rates on your savings accounts, things like that. Now, I'm not saying that this company fits for everyone's portfolio, but my portfolio, I'm shifting more to an overall growth perspective on the portfolio and the dividend, wanting that dividend to raise up significantly every year. And that's exactly what I think Ally has the capability to do over the next 5 to 10 years. If they continue on this fantastic growth trajectory, they're going to be able to reduce the shares, giving my shares that I'm buying up now a much higher percentage value ownership of the company. And they're going to increase the value that they're returning to me through these buybacks and the dividend increases. Now, in 2021, they did a buyback plan, and I should have really looked at this overall last year when I should have bought this company. Their market cap is currently sitting right under $18 billion. I'm going to read you, and we're going to go over the press release that came out this week. This is why I immediately scooped up some shares earlier this week. They announced that their board of directors are doing an authorized $2 billion common stock buyback, effective until December 31st, 2022. Now, Ally had already done last year. They recently completed a $2 billion share purchase program in 2021. They expect to begin repurchasing shares in the first quarter of 2022. Now, their stock price has gone up pretty significantly over the past year. It's had growth. That's obviously, if you're buying back, if you're a $20 billion market cap company and you're buying back 10% of your company in shares over the course of a year, you're going to see some share price fluctuation, but you're also going to see new investors, because these types of management ideas and philosophies and direction that they provide investors a very clear path in what they're doing for their money and with their excess capital. That is going to give you investors that want to buy in for the long term, especially while these types of plans are being enacted and the company is showing significant growth like this. So last year we had a $2 billion share repurchase. This year we're having an additional $2 billion share repurchase, which is over 10% of the company's market cap that they're going to be buying back throughout the course of the year. Now, we could have a slide where the company, drops its market cap significantly, which would make their share repurchase even more effective if we do have a significant market pullback in 2022. And the reason that I find this really, really interesting is that in conjunction with this, they announced that they're going to raise the quarterly cash dividend to 30 cents per share. This is a 20% increase to the prior quarterly dividend. 20% increase gain over the course of the year. So not only are you getting this bundle of fantastic share repurchasing over the course of 2 years of $4 billion, you're also getting a massive dividend increase. So you're getting direct cash flow back into your portfolio by holding stocks like this that are high quality, that are both do have a buyback plan in place and are giving you a fantastic dividend. Now, their capital position basically allows them to provide what they say meaningful increase to the common dividend for the 7th time in as many years, to maintain a robust share repurchase program. I would say that is fantastic, right? That is the exact type of direction that I want to see from a CEO. Jeffrey Brown is clearly laying out that those actions represent the important components of our capital allocation framework and our broader objective to drive long-term value to our stakeholders. I want a CEO of my companies that I own in my portfolio to give me this clear, concise message of what they plan to do with the money that they're earning. I want to know how I'm going to make my money back on these types of stocks. And because it's a bank, most banks are very just standard, right? They aren't flashy. They're not necessarily fun stocks to own or be excited about. And Ally is one that I can easily get behind as a product that I've now used for multiple years in multiple ways. I'm looking at buying a new vehicle. It's been we're going on 10 years in just like 2 months that our vehicle is 10 years old. And I'm not the type of person, to go out and buy a super flashy car or anything like that. It'll likely be a Honda or a Toyota that we go buy, that type of automobile purchase. I will likely be looking at using Ally for that, to finance that loan. Now, looking at this, you see these types of plans come forward with a couple other companies that I have in the portfolio, mainly VST. This was my 2021 buy. I went really heavy into VST because they had a really solid plan going into 2020. However, Uri, the winter storm, took into effect a huge dip in that stock, which created a huge buying opportunity for investors in early 2021. That really heavily paid off for 2022. Going into 2022, the share price is almost back to all-time highs. I think that Ally is just about at its all-time highs, but I think that its quality is going to shine and go forward. Going back and looking at these metrics, this is absolutely fantastic when you look at quarterly. I can't wait for the year, full year for 2021 to come out for the stats overall. Their payout ratio prior to this updated dividend increase is absolutely fantastically low. It's, around 10%. As always, with any tool that you're using, make sure that you do go look at other things like the K forms for the company before you make investments in them. Sometimes information can be inaccurate, or it's just not as up to date as other sources of information may have. So, just to be very clear, some of this information could be inaccurate. Obviously, it doesn't have the full year's information in there. So, make sure that when you are looking at companies, even using quick glance tools, that you are going to multiple sources to get your data in for buying those companies. Now, I do want to show you one last thing, and I had clicked on it earlier, a little spoiler, but I updated Propeller again. You can see we still have some dividends to come in for January, BST, JPM, OZK. All of that will likely roll in to Ally. I'm probably just going to do another buy of Ally near the end of the month here. However, I did want to show you, this is what the updated position with the new dividend is going to look like. So I'm expecting to get about $180, about 181 in dividends from Ally. It will likely go over this because I'm likely going to buy a few more shares and push this position up probably closer to the 620, 630 share range before this dividend comes in. So this being the first dividend of the year, this means that I will get 4 dividends throughout the course of the year in this stock. And I think that this is going to be absolutely phenomenal. I'm hoping that the share price does dip down a little bit so that the next set of buys that I do is below 50. However, I think that it's a solid purchase even in the low 50s right now, knowing that they're going to be putting forward that plan to buy shares back throughout the course of this year. I think that's absolutely fantastic. I can't wait to see the overall growth, see what the net cash flow is for 2022, and I'm happy to have this as a position in my February payouts. So I do want to thank you all very much for watching. I've got to get out there, play with the dog some. We are going to visit a couple shelters this weekend. It is a holiday weekend, so we have a 3-day weekend, and we are going to look at adopting a couple more dogs. As you could probably hear in the background, the puppy was at my door a couple times, and now that we've got some land, we think that it's the right time for us to go and see if we can adopt a couple more dogs and bring them into our lives and our house. You should know that, we don't plan on having kids. We do plan on having animals and rescuing. So that is what we're going to do for this weekend. I hope that every single one of you has a fantastic weekend, and I look forward to hearing from you. What are your thoughts on this? I generally want to do dollar cost average into the portfolio, but we did sell a rental property last year, so I'm excited to deploy the rest of the funds and get them working for 2022. What do you think of Ally overall as a bank? Have you used them before? Have you had any experience with them, positive or negative? I'm super curious. So overall, this is Dividend Doggo signing out for the week. This is the 15th of January, and I hope you all have a very blessed week.